Hello, 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 and welcome to the live Q&A session here on the Foreclosure Deals Coach Group. Thank you guys so much for tuning in. I greatly appreciate it. Listen, as always, what we cover here at the show, just in case you are new, this is a live Q&A session for people who are looking to get started in foreclosure investing. Now, a lot of fun stuff is happening in the real estate market right now. So we're going to jump in and address some of those things right out of the gate. But as always, this is supposed to be a live Q&A, and my objective here is to answer your questions in real time about getting started in real estate investing. For those who don't know, we help people to find, figure, fund, fix, and flip your first foreclosure deal. And to accomplish that objective, I'm a coach. Now, there's a big difference. I really got to bring this up. A big difference between a mentor and a coach. See, there's a bunch of mentorship groups out there right now. Okay, this push in the online education space has a bunch of people who are mentoring on real estate. But here's the problem with mentorship. Number one, mentorship is basically just offering advice, and I can tell you there's a lot of people out there offering advice who have not done enough real estate experience to speak intelligently on mentoring somebody else. You see what I'm saying? If you just started last year doing real estate investing, you likely should not be mentoring others to do it. But we're seeing a ton of that pop up all over the place. Little background on me, so I can diffuse that a little bit. I've been in real estate investing for 17 years. Okay, I've done over 300 fix and flips. My best year, we flipped 47 houses here in the Colorado Springs marketplace. The year before that, we did 40 flips in this market, and we were on track to a solid 60 deals, okay, in 2022, but the market had some other ideas and we had to shift gears a little bit as the market converted. The good news is that market conversion is now offering a ton, and I mean a ton of opportunities for people who want to get into real estate investing right now. So if that describes you, if you're looking to get started, my advice to you is to hop on a discovery call. Listen, no sales pitch. My objective is going to be to find out where you are in your investing journey. And if I can help you as a coach, and I'm going to give you the difference here in a little bit, but if I can help you as a coach, I'm going to ask you to join the coaching program. And if you decide to do that, if you are the type of person who can take action at that degree, we are going to guarantee you results. We're going to get you from finding a house to flipping a house with a $25,000 minimum profit for as long as it takes. Again, this is not one of those situations where you pay and hope to get results. I'm going to work with you for as long as it takes to take you from wherever you are in your investment journey to doing your first fix and flip deal with a minimum profit of $25,000. So if you've got any questions about how that's going to work, hop into the chat, please. Let me know what the questions are. Normally, as people are kind of streaming in over time here, so it gives me some time to sort of chat, which I don't mind. I'm big on talking, so I don't mind talking to the general public here. If you're here live, though, let me know. Click on the link. Just put something in there here live. Say hello, just so I know you're here. I really appreciate it. And obviously, if you have any questions, please hop in and let me know. Let's get going. So in current news, while we're waiting for comments to start streaming in, you probably recently heard about the Silicon Valley Bank debacle. And if you didn't, well, you need to be paying attention to the finance market a little bit more, okay? This is going to affect the lives of pretty much everybody who wants to invest in real estate, and a lot of people who don't, just need to keep track of what's happening in the market. In essence, what happened is a very large tech bank, Silicon Valley Bank, basically said they were going bankrupt. They could not pay the deposits or support the deposits of about $2 billion. Okay. Oh, sorry. That's way off. $200 billion. Okay. $198 billion was the amount of money they said they could not make whole on. Okay. What happened there? Well, they had invested in some bonds. The bonds didn't pay off. It was kind of, I guess it was a risky bet in this case. When you hear bonds, you don't think of risky bet, but this was a tech startup bank. So a lot of people in the bank had a whole lot more than a small amount of money in the bank. Now, all banks if banks that are insured by the FDIC, the Federal Deposit Insurance Corporation, sorry if I'm messing that up. They basically insure the bank accounts to $250,000. So those deposits were covered up to $250,000. Now, for most people, a bank failure is not that big of a deal because they didn't have $250,000 in the bank. But in this case, we're talking about tech startup companies that may have had millions multiple millions of dollars in that bank account when they announced to their depositors that they were insolvent, they could not pay that back. Obviously, that caused a lot of people to be concerned about their bank. So they're going to run to the bank. What they call it was a run on the bank. People are going to want to pull the money out of the bank. You may remember the story, if you've studied history much, about the Great Depression. Well, that was a big reason why the Great Depression got its start. One bank proved insolvent. A very large bank said they were insolvent. A bunch of other people were like, well, if they're not going to pay their depositors, we're not going to pay our depositors either. And people ran to the bank, pulled all the money out of the banking institution. It caused a failure of the banking system as we knew it at the time. And we went into this huge Great Depression crisis, a large-scale recession that had a huge damaging effect on the economy. Well, the government doesn't want to relive that, especially close to election season, right? So they hopped in right away and they said, no worries, we'll just print another $200 billion and we'll make these accounts whole, everything will be okay. Right after they announced that, another bank mentioned, the second largest bank in the country, announced they were insolvent. Okay. And they're saying now, the irony of this is they're saying now, we've got this handled. It's all figured out. Nothing to worry about. This is from the government. Okay. When the government says they've got something figured out and don't worry, your next step is to worry a lot, because the government very rarely has anything figured out. Okay, that's just the fact of dealing with our federal government. Do not believe them when they say they've got figured out. This is not a conspiracy theory. If you recall, I was flipping houses in 2007 and 2008, and there was a very similar discussion about how they were going to be able to handle and contain the mortgage crisis. Oh, we've got it. We'll just pump some money in the economy. It'll be okay. No big whoop. That's not what happened. Now, as you sit here and you hear this, you're probably thinking, well, Donny, if the whole country's about to go to crap here, why would now be a good time to invest in real estate? Warren Buffett, the famous investor in general, said the secret to my success has been finding out what everybody else is doing and then fundamentally doing the exact opposite. Give that some thought. If everybody's panicking about the real estate market, okay, if they're panicking because these banks are failing, should you be running away in panic as well, or running the opposite direction and finding out where to profit from this? That's a pretty obvious answer if you're watching the show. Okay, comment on that. What do you think? Should be running to or away? I know they've got a couple of viewers right now. What's your thought on that? Love to hear your comments. The reality, guys, is right now is the best time to start looking at real estate investing. Okay, because there's going to be way more opportunities on the market right now as people, unfortunately, are losing their jobs. They're losing their homes. Okay, the stress from the economy is causing more divorces than normal. All of these things are going to mean there's going to be a lot more housing inventory available. The more inventory that there is available, the more opportunities there are for us investor types. As a guy who's investing in two of the hottest years in real estate in notable history, 2020 and 2021, okay, two of the hottest years, and 2022 was no slouch. Okay, these were very busy years. I can tell you that it was very difficult to find opportunities. Now, despite that fact, I still managed to do a whole bunch of flips because I had a great marketing system and I had background. So when those opportunities came in, I was poised and ready to take advantage of them. Okay. Today, there's going to be much more opportunities. So newbies, people just entering the market now who are savvy, who are not listening to the press about how bad the market's going to get, are going to capitalize on buying the properties correctly. You got to be way more focused on your buy price today. Okay, because we have an idea based on fourth quarter numbers what houses are supposed to be selling for right now. We cannot use the third quarter numbers. We cannot use the second quarter numbers. We certainly cannot use the sales from 2021 or 2020 to define what a house is worth today. But we've got recent statistics right now, okay, on what's happening with the marketplace based on what happened in fourth quarter. And those statistics are useful because the interest rates went up in about the third quarter, right? So we felt the impact of that in the third quarter. And now that we're in first quarter of 2023, we can use that fourth quarter data, but we're almost through 2023's first quarter. So we've got really solid sales comps right now. All of this is to say that if you're buying the property correctly, if you're doing your analysis properly, you not only have nothing to worry about, you're actually doing much better than most people who are trading on the doom and gloom that's coming from the media and the press and other people who have never done a fix and flip or invested in any sort of real estate. Do not listen to your broke Uncle Phil about getting into real estate investing. Okay, that is preposterous. The only advice you should be taking is from people who are more successful than you are. Okay, if you're getting your advice from less successful people, you are doomed to head down that road. Okay, this is not an advice column. I'm not in the advice business, but if I'm going to give you some advice, it's that the first step that separated me from the layman man, I really want to be a real estate investor, to being a guy who's done over 300 fix and flips in my career, was getting a professional coach. And that is true of everything. The joke I like to say is if you wanted to get your pilot's license, you wouldn't hop into the plane and go, I'm going to figure this out, right? But so many people get into real estate investing thinking that's exactly what they're going to do. Comment on that. If you're in the room today, what do you feel? What's the first step you think is holding you back right now from getting into real estate investing? I'll wait on comments for that in just a little bit. But as we're waiting on that, guys, I can tell you that in my experience, what's holding people back is lack of courage and knowledge. The mixture in between them, okay? You don't have the, cojones right now to step out on faith and do this. I can fix that with the coaching by hand holding you through the deal. And you don't have the knowledge to know what you need to do to make that a successful venture. If you take those two pieces out, we're getting actual results with my clients each and every single day. With that in mind, I want to do a shout out to my client, Steve. Steve did a deal. You're going to love this story, okay? Steve is he's in the Army, okay? So he signed up for the coaching, and then right after he signed up, the military shipped him off to Poland to do like a 6 to 8 month tour out there, okay? Right after he left, I found him a great deal. And I want to note that I found him a great deal. I'm not just here patting myself on the back, but understand that the coaching comes with a deal finding service component. Okay, I am not here to mentor you on how to locate deals. I do want you to learn how to find deals on your own, but when you're getting started, if you had that skill set, you already would have done it. Okay, I am literally sourcing deals all of the time. I got deals coming in from multiple angles all of the time because I bought so many deals wholesale over the years that I know all the wholesalers. I know the agents that are playing the big league games out there. And when they have deals, they bring them to me. So I helped Steve to find this deal. He paid $255,000 for the deal. I helped him get set up with funding with a lender that specializes in military personnel. Okay, this is a lender that wants to lend money to soldiers looking to do their first investment deal and will fund up to 100% of the deal. And Steve took him up on that deal. Okay, he had them fund the entire purchase price of the deal and the rehab on it. So he's got no money out of pocket on this property. The rehab came to just about $30,000. Okay, so we bought it at $255,000. Hope you're good at math. I need to keep up with me here. Okay, we bought it for $255,000. We added $30,000 in rehab costs, and we listed the property this week. It hit the market for $375,000. Now I got to tell you, when we bought it, my thought was we were going to get to $355,000, and that was going to comfortably clear the $25,000 profit requirement. But he did an analysis with his agent, my team agent as well, and they came up with, we believe we can hit the market at $375 because the entry-level properties here in Colorado Springs are trending upward right now. Why? Because there's a low amount. The lowest you can get a nice house in this city is $350,000. Well, this is only a nice house, it's a pretty good size at 1,700 square feet. But don't take my word for it. Let's take a look, okay? I'm going to share my screen here. And I want to show you the completed project that's now on the market. It's only been on the market for a few days, so it hasn't sold just yet, but we're not freaking out about that, okay? It's important to know that the market's running a little bit slower. Houses are not going to sell in 2 days on market anymore. Here we are. We're going to hop in to the property. It's on Winnipeg Drive. Well, that didn't help. Hold on. Here you go. That's 501. All right, here we go. 609 Winnipeg. All right. Here's the outside. Nice looking house. They painted the exterior. It was really ugly before, like this horrible orange color. Check out the inside. And the good news on this property is it wasn't in terrible shape overall. These cabinets we kept, these granite countertops. But what's fun about this story is Steve has never physically been inside of this property. He's seen it via video. He's seen it via pictures. He's talked with a contractor about issues and shared issues about getting things done, but he's never physically been inside of this property. And he's currently set up to make somewhere between $40,000 and $50,000 in back end profit on this deal if it goes for this 375 number. If it goes down to the number I believe it will get, which is about 360, he's still going to make $30,000 to $35,000. Pretty easy on this deal. Okay. The reality of what the difference between when I met Steve and where he is now is not that I'm some kind of mega genius, but that I met Steve and he was willing to take action and get going, even though he knew he was going to be deployed to a new location in a few months. Okay, that's how strong he felt about the coaching product. I really appreciate clients who can take action. So when you meet with me on the call, I'm going to let you know there's a great discount provided to you if you can make a decision on our first initial call. Why? Because the good deals that hit the market don't have time to wait for people to think about them. The reason I was able to do so many deals, nearly 50 deals in 1 year, is because I have trained myself to act quickly. That didn't happen overnight. Okay, that was a process I had to learn with my coach. Do your evaluation, know your numbers pretty closely, and then take action. And it's very difficult to do that when you're first starting out. So my advice is get help. And the help that I can provide you as your coach is I'm going to walk you through piece by piece how to find the deal, how to analyze the deal, where we can get the capital to fund the deal, who needs to fix the deal, provide the contractors and all that stuff to you. And then we're going to flip that deal to profit, minimizing your transaction costs by connecting you with my team or helping you to sell the property on your own. In either case, your results are guaranteed. Right. And that's a tough thing in the coaching industry. How can I be so confident to do that? Because I'm simply not going to take anybody into my coaching program who I'm not 100% certain I can help to do their first deal. So it makes it very easy for me. I've done so many deals over the years that there's no doubt I can find them. What we're missing right now is the people out there who understand that they can't listen to the market hullabaloo while the rich people are getting a lot richer. You think these banks are hurting as they default on billions of dollars worth of assets? Come on. They have billions of dollars to play with. Okay, large lending institutions, they're not hurting when the market goes down. They figured out a way to work in the markets that are the most lucrative. And the most lucrative markets in the country right now are the underpriced, distressed assets, which are foreclosures. Okay, we're in a system right now, there'll be more foreclosures than ever. And if you're buying those properties below market, fixing them up and selling them, there is no way for you not to make money on that deal as long as you're willing to take action. That's the only variable separating you from the life that you want is the ability to take action. You're probably in a job or heading to a job that you don't want to have, making you less money than you want to make. If you don't change that situation, how are you going to get to the next level of life? You know, and obviously you didn't sign up for this call for me to talk bad or to look down on you. I get it. If I didn't have the mentorship and training that I had, I would not be sitting where I am sitting here today. But today, having done as many houses as we did, we have a large rental property portfolio. We got a house in Florida with a pool right now as a VRBO. Okay, a couple of nice cars, a decent amount of money in the bank, and all of that came from the desire to understand that there's a market shift happening, and we watched it happen in 21 and 22. We went, listen, you can buy anything, flip it, and make a profit. We might as well buy a lot of them. So we did. You know, and when I say we, I'm referring to my wife and I. She's an interior designer, so she really knows how to make houses pretty. That's another service you get when you're joining up with the coaching, is you're gonna get consultation on what the house needs to look like to sell it. You simply can't go wrong with this program. All right, I've been jabber-jocking for too long, but we're 20 minutes in, which is when we're usually wrapping this up. I'm going to open it up for questions right now. Are there any questions out there from our remaining live viewers? What's stopping you from getting into coaching, and how can I help? We're going to take a few minutes to open it up for questions and see if anybody has anything. Anybody out there? That's okay. Listen, if you're not sure, you don't have a question right now, the advice I can give you is head out to foreclosuredealscoach.com, or message me right here in the group that you want to hop on a call and discuss coaching. I don't hard sell. I only take people who want to be in my program. If you want to change your life, you want to start real estate investing, this is an opportunity to do it. And right now, you've got the ability to ask free advice You can ask me anything you want to find out how to get started, but I'm telling you, we can hop on a call, evaluate your financial situation individually, and let you know how to get a deal done. Oh, we got our question. Is there a way to put your coaching fee on top of a loan for foreclosure loan? Yes. We offer financing as well. So I signed up with a company called Ease Consulting. And the way that they function is they will give you the coaching fee. They'll finance the coaching fee in, and they will also finance in your down payment. Now think about that. You're going to need a loan for $25,000 to $30,000, right? If you're talking about covering, you need to have about $25,000 liquid to properly get into a deal. Okay, so this company will lend you the money to do the coaching and the down payment they need to get done. So we can finance the coaching into the loan. It's not financing the foreclosure loan as you're speaking, but we would be able to get you financing for the coaching up front so you can get started, and then you're going to have the money either to do the deal with your own money, or you can use this capital from this private line of credit basically to put down in your first deal. Did that answer your question, user? Facebook. It only says Facebook user on my side, so. Pop this one up. So the answer is yes, absolutely. Right? Any other questions I can answer on that? And hopefully that answers your question. If not, let me know. I can offer more clarity. But here's the thing. That's one of the bigger excuses is I don't have the money to do coaching or buy a house. I would say of the objections to people, excuses is wrong. Right? Of the reasons that people don't do this, that's probably the biggest one. Right? I don't have the money to get going. Find the money. And because I know that's been a problem, I can help you with that. If I had gone to my coach years ago, a guy who has done hundreds of flips himself, and said, well, I just don't have any money. I don't know if I can do this. I would be here right now. Okay. Success does not listen to excuses, guys. And I get that this is a big investment for most people. It was certainly a big investment for me back then. But had I not made that investment, I would not be before you today talking to you about how I can help you to do the same. So yeah, we can absolutely finance that in. We just need to get you a upfront operating capital loan with this company that wants to finance my clients specifically. I signed on with them because they believe in the vision of what I'm doing. They believe that I can help people, and they know that money's going to be safe because they're going to get results, right? If they have that belief, this is a large lending institution. What's leaving you in doubt right now? Correct. So generally speaking, you're going to need $25,000 down. So if you add in the coaching fee, or what the coaching fee usually is, we would put the fee and the foreclosure together in one loan. So you'll have that loan. You're going to have a payment on that within 30 days. So we got to find a house pretty quickly to put that towards. We don't want to put you in a cash crunch situation. But yes, your fee and the foreclosure house together. Now understand it's not purchasing the house. So what you're getting, and I think I understand the question a little better now. The coaching fee and the down payment are in one loan. The loan to buy the house is a separate loan. The hard money lenders are just financing the house purchase. You need the capital to do the down payment and pay for the coaching fee. And that's where this lending comes into place, right? So you're financing the coaching fee, and if you need to, what you need to put down. One of my concerns is getting set up with a finance company was that if you don't have the money to do the coaching fee, where are you going to get the capital to put a down payment on a house? Right? So this solved both of those problems for me. Now we have the ability to do the capital for the coaching fee and the house in one fell swoop. Leveling with you, the interest rate is not great, but if that's the only thing stopping you from getting a deal done, I highly recommend you look past the interest rate and push forward, get the knowledge and coaching that you need to do a deal. Once you got that first deal behind you, you made 25 grand. The second deal is going to get much easier, is it not? And the third one's going to be easier still. And by the time you're doing 3 to 4 deals a year, you're going to be wondering why you struggled with the decision to do the first deal at any point at all. Does that help? All right, I'm gonna assume that we're good on that. And if you have any more questions as far as that goes, let me know. But yeah, the coaching fee and the house itself could be built in. Okay, good. I'm glad we clarified that. So listen, guys, the market's shifting. There are deals everywhere. I use the Privy app to find deals. If you haven't signed up for Privy yet, I'm going to just pop that up here so you can head out and get Privy. Privy is how I locate deals on the market. And for me, that's the best strategy. It also helps prevent analysis paralysis by showing you deals in real time. But I'm just going to hop into Privy, and I go to every city. I talk to people all across the country, and a lot of them are like, well, there's no deals in my area. I've looked. Well, if you're just looking on the MLS or Zillow, etc., you're not looking in the right spot. I can hop in here and look in El Paso County, Colorado, which is where I'm located. If it pops up, I don't know why it's not. There it is. Okay. I can filter that real quickly by looking for fix and flip deals. And listen, you can set up a macro so you just have a safe search. I like to do this on the show so you guys can follow the process. It's just going to create that muscle memory. But I'm looking for properties that are 75% of value or less, single families that are available that could be good fix and flip targets. Now, remember, this is artificial intelligence, so it can't predict everything, but I see this property, and anytime I see something in the threes right now in Colorado, I'm like, okay, I need to look a little more carefully at this one. But here's one for $350,000. It's 1,960 square feet, a 4-bedroom, 3-bath house. It's got all the signs of deal, baby. Look at that horrible deal, that horrible blue carpeting. Right? Most retail buyers are not going to walk in on this dirty, ugly carpet and go, can't wait to move into this property. But we are not retail buyers. We are investors. So all I see when I see mint green countertops is opportunity, right? Because nobody wants this today. So they're asking $350 for this property. Is it a deal? Well, let's do some quick market analysis. If we flow down here, one on the same street, 0.17 miles away, okay, we're talking about 1,200 feet from where this property sits, a 3-bedroom, 3-bath, ours is a 4-bedroom, 3-bath, 2-car, okay, sold in February. We're talking a month ago, if even, okay, sold for $490,000. I got to buy this house. I don't know why I'm even showing this to you guys. I need to go purchase this property. What's funny about it, look how similar it looks to our property. The outside of it looks like the same house. Right? Remember, in these neighborhoods, they built multiple copies of the same property. Okay. This is the same property basically, and it sold in February for $490,000. Now, obviously, we can't walk in for $350 and sell it for $490. We're gonna have to fix it up, but these guys didn't fix it up that well. This is an original owner-occupant condition. They put in some granite countertops, but I'm not an interior designer. My wife is, but I can tell you, if she was looking at the pictures of this retail comp, she'd be going gross right now. Okay, today we're using a gray paint tone. So we need to paint the property, but this is not an over-the-top remodel, and it sold for $490. We could pick this property up for $350. What are we going to spend to fix it? $40,000, let's say 30. I don't know. I haven't seen the house, okay? But I can tell you, based on the pictures, we're probably going to have $40,000, maybe $50,000 into the remodel, okay? And that's really high because this is a cosmetic remodel. So I believe we can get that done a little bit cheaper. But let's assume we spend $50,000 for the sake of numbers, okay? This property then sells for $490,000. You've got loan fees, you've got closing costs, you've got agent fees, etc. You're still walking out of this property with a $40,000 to $50,000 profit, no doubt in my mind about it. Okay, is it gonna sell? Well, this other one did in February. Don't get it in your head that houses aren't selling. Are they taking longer to sell? Absolutely. This house was on the market for 36 days before it sold for $490, but it wasn't near as nice as ours is going to be when it's done. Okay, so when a house is really nice, it tends to sell a little faster. This average house in an average condition sold in 36 days, so a nice house will probably sell in 20 days or so. Okay, but this is a profit. So when people say I can't find deals in my market, literally I can go into any market, and we're going to do so on our call. We're going to hop into your market on Privy, and we're going to quickly see if we can find a deal. Whether we do or not, I know that we will be able to. There aren't deals in the market every single day, but I have absolutely no doubt this is going to be a great deal for somebody who wants to pick this thing up. And I'll be frank with you, now that I know about it, I'm probably going to file an offer on this one because that's a huge opportunity for one of my clients to pick that deal up and go with that. And just a series, all of these Privy thinks are deals based on that analysis. Are they actually deals? That depends on running the numbers, guys. It's an artificial intelligence trying to predict the market a little bit. So we got to run our figures, which we just did. And we determined that the one for $350 is certainly a deal, right? And some of these other ones may not be. But the point is you need to get over that analysis paralysis, and I can help you with that as part of the coaching product, all right? Oh, we got a couple of comments here. How much money do you need to get the ball rolling? Good question. Again, I'd like you to have 10% down would be ideal. So if we're and right now I'm trying to buy inexpensive properties because that's what's moving. So 10% down, you need about 25 to 30K liquid plus the coaching fee, which we will discuss when we do the call. Okay, that website is called Privy. It's a analysis software. Please, if you sign up for Privy, I ask that you use my affiliate link. You can get there at bit.ly/FDC Privy, Privy. I make a couple of bucks a month on everybody who signs up using my affiliate link, so you can help put my kids through college and make my life a little easier because I provided you the advice. So if you don't mind signing up for that link, I'd really appreciate that. So yeah, money down, you're going to need about 10% liquid. And again, if you don't have that, I've got some funding sources that can provide you that without problem, as long as you got a decent FICO score, 620 or better, and you can show an income of 35,000 or more from your day job. Does that answer your question? Let me know otherwise. We're going to wrap this up here in just a little bit. I'm going to open it up one last time for questions, but please do sign up for Privy. Get that software, start analyzing your market. I can tell you that's not going to be enough for you to get the confidence to do a deal in most cases, and that's okay. But at least you'll start looking at your market and finding those deals. You'll know what areas the pockets of deals are. You're going to learn your market a lot better, and you're just going to be a stronger, smarter investor from all of that. Okay. The next step is to sign up for coaching and get going so I can walk you through getting that first deal done. But please don't use the excuse that you can't find the money. I've got sources for that. Please don't tell me there aren't deals in the market. We know that there are. We just found one in real time. Okay. We know they're out there. And in every market, everywhere there's an opportunity. You just got to have your antenna up there looking for the right deals as they happen. Okay. I'm going to open it one last time for questions. We're going to wrap up for the day. Has anybody got anything else they'd like to ask? Yes, I do everything. After almost 20 years in the game, there's no type of deal I don't think that I've touched at some point, okay? When you get the coaching, we're going to be focusing on fix and flip, okay? Because I want to get money back in your pocket as quick as possible. So the quickest way to get capital back in your pocket, in my professional opinion, is to do a fix and flip quickly. But I do all sorts of deals, and I'm going to consult with you on all sorts of deals to make sure you're getting a profitable result. Okay, I want coaching clients out there who are singing the praises of the foreclosure deals coach system and saying, hey, that Donny guy is a pretty cool guy. He helped out. Hey, I want to be your guy. To get started with that, go out to the foreclosure deals coach website and let's get signed up for a coaching call. I'd be happy to work with you to do that call, talk about it. Now's the right time to get started. But yeah, all types of investing space, but we are going to focus on fix and flip to get started because I want to make you some money so you know what my capabilities are as we move forward. All right. I appreciate you guys tuning in. Thank you so much for being a part of this live Q&A session. If you haven't, you've already joined the Facebook group. That's why you're seeing this. Well, if you haven't joined the Facebook group, head out to the Foreclosure Deals Coach Facebook group. You can ask questions all the time. I'm in the group all the time answering questions, helping out. And find me on YouTube. If you're already watching on YouTube, thank you to the YouTube viewers, etc. But let's get started, guys. The market is moving at a very fast pace. Those who decide to move with it are going to make a ton of money, and I want to be your guy, your coach to make that happen. With that, this is Donny Corum, your foreclosure deals coach, thanking you once again for tuning in each and every week to this live Q&A session and reminding you, don't buy a house, buy a deal.